ticker, flipping killer. Chart magician, cash gorilla, moving green like I'm a villa. Drop the bids, I make it thriller. Every candlestick I touch, turn it gold like Midas. Got your girl begging on her knees, yes, your highness. Putting puts on your dreams, call it financial euthanasia. Options popping, blowing up like market detonation. You follow gurus, boy, I am the oracle. Got more leverage than a crypto, well historical. Numbers doing Bangra, money doing Garba. You stuck on the sidelines, watching like a barber. I got diamond hands, printing bands in my sleep. You bag holding game, stop praying it don't deplete. I flip stocks like a dope boy, moving in packs. You reloading on dips, I'm out counting my stacks. I don't follow no charts, I just whisper they gamble. Made a killing today, left the brokers in shambles. I see fear in your trades, I see Lambos in mine. You hedge with your prayers, I hedge with the crime. Dumping your dreams while I cash in the wreck. Turn your whole bankroll to a welfare check. I drop liquidity bombs. I got brokers on speed, down my gains, got gains. Hedge fund managers acting wild, I don't do regrets. Only futures in my vision, turning pennies into racks. That's my daily intuition. I see patterns in the stars, Fibonacci in my sleep. Running Wall Street like a king, yo, Warren wanna meet. When I enter, bull salute, bears retreat. You hedge against me, man, you playing in hide and seek. Numbers doing Bangra, money doing Garba. You stuck on the sidelines, watching like a barber. I got diamond hands, printing bands in my sleep. You bag holding game, stop praying it don't deplete. I flip stocks like a dope boy, moving in packs. You reloading on dips, I'm out counting my stacks. I don't follow no charts, I just whisper they gamble. Made a killing today, left the brokers in shambles. I see fear in your trades, I see Lambos in mine. You hedge with your prayers, I hedge with the crime. Dumping your dreams while I cash in the wreck. Turn your whole bankroll to a welfare check. Go buy low, sell high, make it stack, let it fly. Bull or bear, I don't care. You print cash in the air. I flip stocks like a dope boy, moving in packs. You reloading on dips, I'm out counting my stacks. I don't follow no charts, I just whisper they gamble. Made a killing today, left the brokers in shambles. I see fear in your trades, I see Lambos in mine. You hedge with your prayers, I hedge with the crime. Dumping your dreams while I cash in the wreck. Turn your whole bankroll to a welfare check.
Oh, brother, oh, brother, oh, brother. Welcome back to another episode of the Matt Kohrs Show, where today I am wearing my luckiest of all shirts. I am wearing my lucky buffalo shirt because for me to survive what today most likely is going to end up being, I'm going to need as much luck as I could possibly get. Folks, I think we are setting up for not only a very interesting trading session today, but also tomorrow. So my biggest tip to all of you, my guaranteed Matt Kohrs MK financial advice to all of you, is put on your luckiest piece of clothing. Whatever it is, if it's a shirt, if it's a scarf, it's a pair of shoes, it could be a handkerchief for all I care. But folks, you're going to need a little bit of luck to most likely make it to this weekend. So my biggest piece of advice, and this is financially backed, I'm putting the old MK stamp on it, put on your luckiest piece of clothing. That's what you're going to need 100% to survive what's going on right now. You're going to need it. So slap it on and maybe, just maybe, you'll make even more tendies. Folks, it is a beautiful Thursday, March the 20th. Where does the time go? It feels like we were just talking about our New Year's resolutions, about how we're going to quit alcohol and go to the gym and stop crying in the shower. And yet we're already 3 months into the year and we haven't made progress on that goal. Wow, March the 20th. Folks, we have a lot to chit-chat about. Yes, of course, there's the craziness of the Fed from yesterday, and we have quadruple witching tomorrow. I'm going to be breaking that down all for you. Very obviously, we will be doing that. But I also want to chit-chat about some of the interesting developments in the options market. And on top of that, we also have just generic, political global tensions with Russia, Ukraine, the Department of Education here in the U.S. So we have some things to chit-chat about. We really do. And I'm going to try to speed through the first stuff because this sell-off right here, I think is a very good teaching moment. And if you don't know what I'm talking about with the sell-off, go look at the SPY, go look at the Qs. They're getting absolutely rocked right now from basically 3 p.m. till yesterday, just a vomit almost to yesterday's lows. Same thing on the Qs. We're kind of at the dip that we saw around 2 p.m. So we're pretty much right at the point of erasing all the FOMC gains. And I get it. I would do it too. If I were you guys yesterday when it was pumping and I said, this makes no sense, I would be dunking on me too. That's the point of the internet. The entire point of the internet is for the people who grew up in the 90s and we got used to bullying everyone on the recess playground. Well, now the internet is for us to be able to bully people in real life, like just in adult life, I should say, not real life. It's digital life, but I get it. I was there with you. I was running around playing tag on the playground in the late 90s, early 2000s, saying every profanity, racial slur, everything possible. And we did it because we liked it. We bullied each other person to put some guardrails on how you acted in society. And I think we were better for it. I think a little bit of bullying really helps each other. And I don't blame anyone for growing up now, being an adult. And we're like, okay, well, we can't do it in society anymore because everyone's become so soft. So we might as well turn to do it on the internet. So I agree with you guys. If I were you, I would have bullied me yesterday too. I'd been like, dude, this clown, where does he get off telling everyone that this is not good news? The market's going up. We're ripping. And this guy is saying he's bearish. So I deserve that. But in return, you deserve it now for me to tell you, I told you so. So you were right yesterday. I was right today. I guess we both have a win at least one win in the overall column of who's winning. So it ebbs and it flows. Sometimes you're the bully. Sometimes you're the bullyee. It cuts back and forth. That's just the natural ebb and flow of life. So yeah. SPY getting crushed this morning, Q's getting crushed this morning, Vol picking back up, actually not only above 20, but at one point it was above 21. We have Bitcoin coming down a little bit, not as much as the overall equities market would suggest, and I'm going to be explaining exactly what happened. I tried to give you guys the breakdown of it yesterday of explaining, hey, the only bullishness here are the zero DTE calls, as in when the market closes, all of that gamma, all of that delta disappears. And it did. And you see what happens when it disappears. We return to where we kind of were beforehand, which is a put-dominated situation. Theoretically, that's not true today. If you look at the zero DTE today, it is call dominated. And it's interesting, and I'm going to show you this, but it is call dominated, but it's actually call selling and put buying in terms of from the trader's perspective, not from the market maker's perspective, which is still inherently bearish, or it's neutral, but it's definitely not bullish. And very quickly, we're seeing the people. Here's what I predict is going to happen. And once again, a prediction is as good as flipping a coin. I think there's a lot of people who got excited on the push yesterday because they're being inundated from mainstream media and social media. Buy the dip, buy the dip, buy the dip. This is the dip. I buy now. Buy. So I think people are like, whoa, okay, there's actually some bullishness. I don't want to miss out on the dip buy. So they punted it long before market close yesterday. And I think when the market opens today, we're going to see quite a bit of hemorrhaging of calls. I think there were some of these people who got into longer duration calls. Obviously, the zero DT calls, they were good. They locked it in. They moved on with their life. They slept easy. But for people who had swing call positions, I think they're waking up and they're saying, what the fuck did I just do? So my prediction right now is right when the market opens, we're going to see just a rush for the exit on the calls, which is going to drop the delta even more, which I think is going to bring us to some interesting tests of support. So we're going to see how that goes. Obviously, that's going to be the main prep before the market opens, but there's other things to get into. Stock future slip after Fed-fueled rally. I don't know why people were going long into it. The news didn't suggest going long. For whatever reason, the bots interpreted less QT as absurdly bullish. But I think you have to take a break there and realize, why are they doing less QT? And they're doing less quantitative tightening. That's what QT stands for. I'm not calling you cute, even though you are. That QT in this circumstance is quantitative tightening. QT on the weekend is like what you say to someone at a bar. Like, hey, you're a cutie. Like, well, that would actually be a horrible pickup line. So don't try that. But also don't talk to them about quantitative tightening. Side note, Matt's relationship advice. If you see a girl at a bar, don't call her a cutie, and also don't talk to her about quantitative tightening. In fact, in this entire arena, just step away from it. You should probably focus on something else. Anyway, back to the show. Before we get into the markets and all that stuff, Trump to sign order to shut down Department of Education, according to the White House. Looks like they're going to be rolling it into another department. This has been a thing he's been talking about for months. He campaigned on it. It wasn't the major aspect of his campaign, but he is following through on exactly what he said he would. So just wanted to share that. Zelensky-backed ceasefire on energy and friendly Trump call. So I know yesterday was crazy. We had the FOMC meeting. Markets went haywire. But remember, there was also important geopolitical updates. On Tuesday, Putin and Trump talked, and it was seemingly solid. And then on Wednesday, we got the follow-up talk between Trump and Zelensky, and we're kind of getting some results. I think it was almost like just mixed in between all the other news chaos of the day, but it was seemingly friendly. It was seemingly progressive. Obviously, the conversation was nothing like what they had with Trump and like in the White House, like when he was here in person, then he kind of got kicked out and there was like all that awkwardness. So that seemingly, I guess Zelensky kind of learned how to better play the situation, and Vance wasn't there. So a little bit of calm in that situation. So do I predict it to all go swimmingly well and to be done by this weekend? No, but once again, this is a piece of positive news that as it continues to progress, it's a part that I think I don't want to say like a black swan event, because that would almost suggest something bad. This is a little piece here that it could actually be the exact opposite. One little piece of information that, hey, if we get this ceasefire and everyone agrees and the world is holding hands singing Kumbaya, and simultaneously the reciprocal tariffs end up not really being tariffs at all, if that whole situation gets solved, these two things coming together is another piece where I'm like, if it happens, and it's a giant if, we could have an absurdly bullish April and May, but I'm really focusing on April. So just a narrative to pay attention to, because this could add some fuel to the bullish fire that has not yet been started. Fed holds interest rates steady, still sees 2 cuts coming this year. This was the big news of yesterday. At 2 p.m., we got the Fed interest rate decision. Surprise, surprise, the thing we already all knew was the Fed fund rate is going to stay exactly where it was. They didn't jack it up. They're not bringing it down. And they're not even going to really bring it down until June, according to the markets right now. You can see it on the CME watch tool. But anyway, we're not going to get one in the next meeting, a rate cut. And most likely we will be getting one in June. So right after this came out, we actually did get an update from the president. This is on his True Social account. The Fed would be much better off cutting rates as U.S. tariffs start to ease their way into the economy. Do the right thing. April 2nd is the Liberation Day in America. So this right here caused a bit of turmoil overnight. You can see he posted it at 10:10, which is part of the reason the markets aren't liking it so much. Once again, he did not do this during the trading day. During the trading day, we were rip skippity doodah all the way up to the key level of 5,700 on SPX. We overshot a little bit, got smacked, and then around 10:10, Trump came on, and clearly they are not seeing eye to eye. Right now, the Fed and the administration are not in lockstep, and that's causing a little bit of issues, and it's reminding us of, oh, wow, April 2nd, still something very, very important to pay attention to. Between now and then, there's various things to pay attention to. Tomorrow is the end of the OPEX, but it's not just a monthly, it's a quarterly. So we have quadruple witching. The end of next week, we have that giant JP Morgan position. And then right after that, we have this whole April 2nd reciprocal tariff day. So there, between now and the start of April, there's a lot of uncertainty, and that really hasn't removed from the system. For a brief moment yesterday, when everyone was just huffing that green bullish gas, we thought, oh, okay. And now the question is, did the cart get in front of the horse? And that kind of like, did the cart get in front of the horse? I would say that the horse was actually put down at 10:10 last night, when once again we were reminded how uncertain all this craziness is. To give you guys a bit more detail of what was said, what wasn't said, the TLDR on this situation, Powell downplays growing risks, sees tariff impact as transitory. I love this. The best word of the nerdy monetary policy geeks out there is back: transitory. Inflation's in transitory. Tariff impact is transitory. Life is transitory. Money is transitory. Everything's transitory. And we're just playing fast and loose with the definition of these rules. I love it. I think life might have peaked when we first realized that the Fed could change the definition of words. And the fact that we're being reminded of again, absolutely love it. Fed projections see an economy dramatically reset by Trump's election. Not long ago, Federal Reserve officials presumed that 2025 would simply be about getting to the soft landing. Boy, oh boy, were they wrong. Now, this is going to be the most painful, the most nerdy, the most eyes glossing over as if you were back in high school part of the show, but it's very, very important. I know once in a while I have to get in this nerdy stuff so we could just all better understand what's going on. Yesterday, we got the summary of economic projections. This is another thing you probably don't want to discuss with the hot girl at the bar. I know I'm adding a lot of things you shouldn't be talking about, but the FOMC meeting, quantitative tightening, summary of economic projections, you should probably keep it here. Now, obviously, I'm not your mom. I'm not going to tell you how to date. You can do what you want, but statistics would show that bringing up the summary of economic projections on the first date, probably not the best move. Just probably not the best move. But hey, if you want to shoot your shot, go for it. Anyway, we got this yesterday. And yesterday, when we got this is what the market initially reacted to. The last time we got the summary of economic projections, it was December. So they thought GDP for 2025 would be 2.1%. They lowered it to 1.7. So they see the economy taking a bit of a hit. They also see unemployment going up from 4.3 to 4.4. So economy down, unemployment up, and unfortunately, they also see inflation going up from 2.5 to 2.7. So they see economy down, unemployment up, and inflation up. That's their newest assertion from December till now. So from December to March, things have clearly taken a negative step. It's actually taken a negative step enough that the other big announcement of yesterday was they're going to lessen their quantitative tightening. I don't want to spend too much time on this, but we know they have a $6.8 trillion portfolio, balance sheet, whatever you want to call it. And this was basically when they printed money out of thin air, bought treasuries and mortgage-backed securities from various banks, raising their reserves. And they say, okay, we did enough. So it's time to let these obligations just mature and not reinvest. This is going to lower their balance sheet and it's going to lower reserves. And the last time they tried to pull this off was in 2019, where at a certain point it was coming down, and the reserves were getting to such a low level that it caused a lot of issues in the overnight lending market, which is billions, if not trillions and trillions. Well, it's not billions, it's truly trillions of dollars. And they're like, okay, we should probably figure this out. This isn't a problem that we're really used to. But then Rona hit anyway, and they started going from quantitative tightening to easing, and they never figured out the problem. Well, we're back to having that problem from 2019. So we were bringing it down. And now we're at the situation where the Fed is concerned about tariffs and also the debt ceiling that's probably going to be breached in August. So we all know that they can't keep bringing it down. And we finally got the announcement yesterday at 2 p.m. And then it was discussed more thoroughly at 2:30 that they're like, okay, we're not going to keep running off the balance sheets as much as we did because we think that there might be something going on in the system and we don't want to push it to the point of breaking. We don't want to be putting that final straw on the camel's back that breaks it. So they basically said, okay, they're going to be less aggressive. And the market at first reacted to that because we're almost back to being in the upside down world where good economic news is bearish and bad economic news is bullish, because that's a bad sign that they're like, oh, wow, we think something's so awry right now that we have to be calmer. And then the market's like, sick, we love that. But in reality, it's telling you about the potential frothiness, if you will, of the economy. So that was the TLDR of what was going on. There were some interesting questions of if you truly think inflation's going up from 2.5 to 2.7, their prediction for this year is inflation going higher, and yet they're still expecting to cut the Fed fund rate by 50 bips from 4.25 to 3.75. And that was the question he got so much yesterday. He's like, everyone in the room was like, brother, what the fuck? You think inflation's going up and you're going to cut the Fed fund rate? And then one of the best points of the entire discussion yesterday was he's like, hey, job's super hard. What would you do? He's like, we're dealing with a lot of unknowns right now, it was an honest answer, which is kind of interesting generally. He's gotten really good at speaking. For those of you who remember, when Powell first started doing all these public conferences, it was atrocious. So he's gotten better at a lot of talk without saying anything. But I think yesterday, that particular response was actually the most insightful and the most honest. Truly. They asked him, they're like, why are you lowering? He's like, dude, this job is hard, man. So I don't know. We're getting a little bit of honesty that like even the people in charge of our entire money supply are like, dude, we're flying by the seat of our pants now. We're just trying to let it rip. So that's the quick breakdown for those of you who might have missed it. Transitory is back as the Fed doesn't expect tariffs to have long-lasting inflation impacts. We're going to find out. They don't expect it to be long lasting, but they do expect inflation to go up this year. And we're not even halfway through, which is going to have huge implications on QT. Are we going to switch to QE? We have Trump fighting it. He wants to bring it down, but they're not going to bring it down if they see inflation going up. Dude, absolutely wild. I think this is a little dramatic to state right now, but I just want to put it out there just in case things really start to break down. It could lead to a point of stagflation. Stagflation, he says inquisitively, Fed sees higher inflation in an economy growing by less than 2% this year. Stagflation is when you have high persistent inflation and your economy is actually slowing down. It's not necessarily a good thing to have inflation, but it's tolerable if your economy is also ripping. But when you get the worst of both worlds, inflation up and your economy growth down, that's stagflation, and it can get really bad if it leads to a hyperinflation situation. Do I think we're there or on the precipice of stagflation, hyperinflation, any of that? No. Do I think we're on the doorstep of a recession? Without a doubt. Anyone with like room temperature IQ would realize that we're heading towards recession. And this has happened before. It's not even that big of it. Well, I shouldn't say it's not that big. It is a big deal. But it's not an unknown. It's not like a wild thing. We historically in the US, and it's also happened various times globally, when the central bank engineers a recession to hit a nice like kind of reset button, allowing us to calm down, get the frothiness out of the system, allow us to build a better foundation and bounce off of it. Why is it happening now? Well, it's game theory. Presidents are remembered on how they leave office, not how they get into office. It is smart for the administration if they realize that something is coming down the barrel that is not good, you might as well handle it early in the administration so you have the most time to solve it. It's the classic saying I used to use in school. The earlier I fall behind on work, the longer I have to catch up. Whenever I was in college or high school, I would prefer to fall behind in my workload early in the semester so I had the most time to fix it. If you fall behind on what you need to do right at the end, by definition, due to the linear nature of time, you have the least time to actually catch back up. Now, is that exactly what's going on here? No, but I think it's a funny analogy and it tells you a little bit about how I view this world. But with the administration, they know that every single president is judged on how they live office. So they would rather leave with the best odds. So it's like, okay, get all the craziness out of the way now, build that foundation, bounce off of it. So your final 2 years are just like the stock market absolutely ripping. So just wanted to share that. That was pretty much just the breakdown of what happened yesterday. This morning, we got initial jobless claims, 223 versus 224, and the Philadelphia Fed Manufacturing Index came in a bit higher than expected. Existing home sales come out at 10 a.m. today. There's nothing scheduled for tomorrow, but tomorrow is a wickedly important day because it is quadruple witching. The other thing that happened this morning was the Bank of England, the BOE. That's obviously England's equivalent to our central bank. The Bank of England holds interest rates. They kept them steady the way we did. Warren's global trade uncertainty has intensified. So everyone's humming the same tune right now. It's no different on a global level. Very quickly, with respect to individual stocks, we're not really in earnings season, but some of you might want to pay attention to Micron, Nike, and FedEx. They're all reporting after the market closes today. And then Neo and Carnival are tomorrow. So I just wanted to share that with all of you. Also, if you haven't already, sign up for the newsletter. It is 100% free. You never had to pay for it. You never will. MattKohrs.locals.com. It's in the description of the video. I break down what's going on in the market. I give you the earnings, all the major macroeconomic events. And then arguably the most useful is I give you the seasonality of each individual day. Today is slightly bullish. Over the past 27 years, the better part of 3 decades, the bulls have won this day 56% of the time, i.e. the bears have won it 44% of the time. So the bulls have the advantage, like slightly better than flipping a coin, but you can see it's kind of choppy. So it's leaning bullish, but it's definitely not the most bullish. And then tomorrow is very much neutral. Some bullish years, some bearish years, but if anything, the results on it have been very choppy. So for today and tomorrow, I wouldn't, from a seasonality standpoint, be going into these days with like just a clear bullish bias or a clear bearish bias. I would just say, okay, what's going on with price momentum? What's going on with price structure? What's going on with options flow? What's going on with the greater options chain? Those would be the things that I'm going to like allow my trades to be made on rather than seasonality over the next 2 trading sessions. Now, before we get into the breakdown of what I'm seeing in the market today, very quickly, a shout out to Rumble Premium. If you haven't signed up for Premium yet, boy, oh boy, do I have some fun stuff to tell you, because right now with Rumble Live, RUMBLELIVE, you can actually get $20 off the annual subscription. And the reason it's a specialty offer right now is because if you guys haven't seen it, they're doing something really cool. They've had this entire like kind of live show setup where it's all these independent creators. They have every single hour slot, and they are eating YouTube's lunch. You could see they just had a run of it where they were #1 in live streaming on all those spots. And then even recently on the 18th, the quartering, he just kept it going. So I highly recommend you guys checking out what Chris is talking about just to see, but like they're just absolutely dominating. Whenever Rumble, this whole new concept of this live that they're doing like hour by hour by hour, that is still being filled by independent creators. Rumble is literally, I mean, they're beating big shows like Pat McAfee. I know a lot of the times, if you don't know of Rumble, you're probably surprised to hear that for most of the day now, it is literally dominating the #1 spot. So because of all this success and the fact that I'm a happy creator on Rumble, mainly because I just morally support this company supporting all of our rights to free speech. And clearly that's under attack if you're seeing all the craziness going on X right now. So to directly support that fight for all of us to have free speech, to directly support the company, and to also see just the craziness that's going on, not only are you going to get a break from the ads, but you're going to get premium content from Tim Pool, Dr. Disrespect, Steven Crowder's Mug Club, and much more. So check that out and use that code Rumble Live. It is pinned to the top of chat. It's in the description of the video. Obviously, shout out to Rumble. Always happy to be partnered up with them. And then that brings us back to what in the world's going on today. To have a better idea of what's going on today, let's take a step back to look at the weekly chart. Right here, I know there's like a lot of people screaming, panicking, not knowing what's going on in the market. When you look at the weekly chart, I think it still tells you overall the market's absurdly high. Yeah. Do we have a little bit of a pullback? We do. Relative to this entire situation, we're still looking pretty darn good. I mean, the last time we saw these levels was in September of 2024. And at that point, everyone was ecstatic. We were all cheering. It was a new high. And then fast forward to March, we're just back at the same level. And people are like kind of freaking out. I think it is good when in doubt to zoom out and realize where we've been, where we're going. And sometimes I think we all get a little bit too sucked into the shorter time movement, and it feels like things are more chaotic than they actually truly are. So I just wanted to show you this. I also wanted to show you that we are at the 50 EMA moving average. So this is going to be big support. We also happen to be at this big support, which was historically resistance in July and August of last year. So we ran up July, August. That's where we're now finding support. Classic resistance turning into support. The other thing I want to tell you, some of the edgeful stats that as soon as you break the high or the low of the previous week, as we did yesterday, you can see yesterday on the SPY, we hit 570.95 and we took out last week's high at 569.54. So right here, we wicked above it. The chance of us now reverting to the other side of the wick is only 8%. So it could happen. It happens 1 in 12 times. But the odds of us getting all the way back down to 549.68 this week is actually pretty low. So I just wanted to show you, first of all, like this whole situation of like, maybe it's not as dire, especially for my longer term investors. Like I think when in doubt, zoom out. Zooming into the daily, it's an interesting situation where we've clearly had lower highs, lower lows, and now we're in this new, I guess, phase of choppiness. We try to get a bit of a bounce, then it got pushed down, then it got wicked, and now we're showing weakness this morning. So really Monday, Tuesday, Wednesday, bringing us to today, Thursday, we're not getting decisive movement. Are we actually getting that push up, or are we actually going to fall back down and maybe revert around to 552? So this week, pretty indecisive. Not as bearish as last week. Objectively, from price momentum, price action, and even in the options chain, the bears are still in control, but not as much. They are definitely giving away some ground to the bull camp right now, which is telling me that we're getting closer to the official shift or a transitional trend change, if you will, than where we were last week. Last week, every single metric was bearish. This week, things are easing up a little bit, but we're not quite into the promised land, which then brings me exactly to today. These are all the key levels I'll personally be watching. And I know there's a lot on the chart, so let me give me a second to better set this up. Ooh, wow, we are dropping. We are at 5,640. So I know there's a lot on the chart right now, but let me just take a quick second to explain it. I think this is going to be very, very helpful to everyone involved. So we are currently right where my cursor is, right around here, pretty much just above the low from that 2 p.m. announcement. We're right around 5,640. The green, the red, and the white, as always, are the high, the low, and the close of yesterday. Those are key levels to pay attention to, depending on where you're coming from, could easily be support or resistance. And as you're about to see, they do align with massive open interest levels. The high from yesterday also associated with the key bullish target for the options market. The low from yesterday, it is very much aligned with the key open interest bearish target of the day. So the high and the low are not just levels people are going to be watching for seeing the previous session, but we're already seeing the options market target those levels. So they're pretty much aligning. The other thing I want to tell you right here, now just focusing on the close, this zone, as of really right now, this white zone between 5,700 and 5,662.5 with a little bit of leeway slightly above and below, this is the giant transitional zone. It is the transitional zone for gamma, GEX, and also delta, DEX. So this is the chop zone. Above it, the bulls have a fighting chance, and my major target would be 5,720. Below it, which we seem to be opening below it, I'd be watching 5,650. I know that's kind of close, so you could maybe consider part of this to be the transitional zone, but really, depending on where we are, and since we're going to open below it, I would say my first bearish target is down here. Yesterday's low, also associated with the key open interest level. If that doesn't hold, 5,600. So this is my transition. This is my bull case. This is my bear case. Just wanted to share that with all of you. And obviously, as things update throughout the day, I will make sure to show it to you. And on that particular note, perfect timing. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly. And if not, have fun. Like I said early today, I do believe we're going to get a lot of people who swung their calls overnight and they realize how screwed they are. So I'm expecting the delta to drop pretty aggressively right out of the gate just from these calls getting dumped. So that's what I'll be looking for. Maybe I'm right, maybe I'm wrong. But as always, I'm not going to be trading in the first 10, 15 minutes anyway. I'm just going to be waiting to see what trend is actually being created. But I'm telling you this, these are the key levels. Oops, let me switch this back. This is the transition zone. If we get up here, this is the no man's land. This is not something where I would be decisively making a move. But as you can see, we are below no man. Let me just draw it out so no one's in question. This is the transitional no man's land zone. If we get above it, great, that's bullish. If we are below it, that's clearly bearish on the smallest of time frames. We open below it, which maybe we get a test back up there and it gets rejected, or maybe we're just going to be going for my first major target of the day, which is yesterday's low associated with a very, very, very important level. I should also point out that Captain Condor is in fact back. Captain Condor sold calls at 5720 and sold puts at 5620, which guess what? That happens to be exactly where yesterday's low was and that huge open interest level. Captain Condor is right here, and actually Captain Condor is part of the reason why it's such important support. So watching this would be my first bearish target. If you think there's going to be a reversion, yeah, 5650, there's a lot of open interest there. And then above that, we're talking about this choppy transitional zone. So above it, bullish, below it, bearish, inside it, patience, wait, and then I have the associated levels. Just because we're in the bearish situation right now, obviously I'd be looking for a test of 5620. If that fails, then I'd be looking at 5,600, which was massive support from 2 trading sessions ago. I would expect a bounce there, but in the event that a lot of bears join the party, then we're talking about a reversion back to the JP Morgan position at 5565. I don't currently have that marked out just because I don't think that's necessarily the highest likelihood today, but just in the event that we do break down, I'd be talking about 5565. So right now, let's just see how the market opens up. We did open up with obviously a gap down, so you might want to play this upside gap fill at 5675. I personally wouldn't do it just because I'm seeing quite a bit of weakness. With respect to price momentum, 5-minute, 10-minute, 30-minute, all clearly bearish. And I'm also looking at yesterday at 2 p.m., This was the big breakout bar. I'm looking at in the bottom right of your screen right now, this 4-hour candle on the futures market. If we break that low, which we tagged it perfectly at 5682, if we give that back, that means the entire bullishness from the FOMC event is now completely wiped away. So I'm watching on the ES contract 5682. It is the low from 2 p.m. yesterday. That would be very, very telling if the market gives that up. Looking at the NASDAQ, you could see price momentum, bearish, bearish, bearish. So right now, obviously, I have a little bit of a bearish bias coming into today just because I'm looking at price momentum. The options market is a little bit more bullish. It is call dominated, but remember, it's quite a few of sold calls, as in it's a neutral to bearish bet, as in they're like, oh, it might go up. We just don't think it's going to go up that high. So actually, we could see if any of that has shifted throughout the day. Let me reload this. This is the current open interest. We have a big node at 5620 and a big node at 5,700. I pointed those out to you. In terms of the open interest change, you could see quite a bit of change at 5620, once again, becoming very important. Looking at the volume that was traded from last night to right now, quite a few calls at 5,700, quite a few puts at 5,600, a perfect 100-point range. And then looking at what they're doing, you can see it's a lot more sold calls. This isn't people YOLOing into expecting a big push. They're saying, hey, it might push. We just don't think it's going to exceed 5,700, 5,720, or 5,745. These are sold calls, not long calls. So it was sell to open, STO. So they're saying, okay, it might be bullish. We just don't think it's going to be that bullish. So it's a giant net of selling calls. So yes, is the options chain call dominated? Without a doubt, but the call dominated in the net situation is actually sold calls. So very important to know like the level of aggression that people are on. And for some reason, you can't see it. What did I already mess up? Okay, here. Just to show you it once again, big put node at 5620, big call node at 5,700. And then to show you the volume, it's a bunch of sold calls. If it were long calls, it would be pointing to the upside. So yes, is the open interest call dominated? Without a doubt, it's call dominated. But I just want to let you know that it's not people being aggressive into calls. They're actually selling the call. So just wanted to quickly show you that. I should also show you that I haven't traded yet today. I'm sticking to my discipline right here. Haven't made any trades on the Apex, on the take profit right now, completely flat, just waiting for that opportunity, trying to keep myself as disciplined as I can and waiting for those perfect opportunities to get involved. It looks like SPX pushed up to that very important level of 5650 right here. Huge open interest level. There's a lot of interest there, especially for tomorrow's expiration, which once again, I know it's annoying to remind you, but it's that important. It is quadruple witching. There's a lot of action at 5650. So I'll be watching this to see if we close above it or below it today to understand the sentiment of the market. But if we do push quite a bit here, that's going to make today kind of painful because this is just the choppy zone. At least down here, we could argue that it is like in a short time frame setting up to be bearish. So if we stay below this DEX transition zone, okay, the bears, like we opened up in a bearish zone and right now we have not recovered into the chop zone, and I wouldn't become bullish until we get above and hold above 5,700. Now, of course, if you're like, you know what, I want to play the ping pong in the chop zone, it's not my favorite play, but also I think that could actually work out for you. But I would not be putting on any bullish positions whatsoever as we are below it, and I don't even really like it in that zone. If you do like it, hey, you're taking a bit of a risk and maybe it pays off for you when we do get the break, but this is a giant chop zone. I cannot be more clear about that. So right now, I'm just kind of watching this level. We sold off at first. Those were people probably panicking, as we alluded to before, people who swung calls and like, dude, what happened overnight? And now we're getting a bit of a recovery up to this 5650. I'm curious if it's going to hold it because this is a key level. And you can see we pumped right up to it and now we're kind of stalling out. The market doesn't really know if it wants to hold this level. And then beyond that, there's clear resistance right above. And I put it at 5662 because it's really this 5-point region between 5665 and 5600. So I cut it in half because there's a lot of action at both of those strikes. So let's see. I see Tesla is falling. I see Nvidia is picking up. Here's a quick look at the flow this morning. I see puts being closed out and calls being purchased on the Mag 7. and then looking at the S&P 500, puts are flat and 0DT calls were being purchased, but in real time, they seem to be taking a little bit of a hit. Here's a look. Let's just get out of this. Let's get out of this. Once again, Captain Condor is back, 5720, and then also 5620. I have a lot of interest in this level today, the 5620, the put credit side of the Iron Condor, which is, by the way, 3.7 thousand contracts, which is seemingly the normal size. We've seen this player get all the way up to 30,000 contracts, so it seems like the base unit is somewhere between like 3 and 5,000. So this is kind of a base unit play, not that big relative to how big we've seen the Iron or Captain Condor play in the past. Very quick side note. All of this information that I use where I track options throughout the day, literally I refuse to trade without it. This is all from Spot Gamma. Right now, we are the only community on the entire planet that are offering 80% off. So if you want to track options the way I do, if you want to call out these levels the way I do, this is the tool that I use. And it's not just the hero tool. They have volatility, they have trace. Like I'm using all these different tools. Highly recommend checking it out. And right now, like I said, we are the only community they are giving 80% off to. So check it out. Pinned to the top of chat in the description of the video. Right now, that's a pretty sweet offer. And like I said, it's like literally I use it every single day showing it to you guys. So if you're interested in tracking it yourself and want to see the flow and understand it's not just indices, obviously they have individual equities right here. Tesla getting smashed. They have Nvidia. Nvidia is actually picking up. Tesla and Nvidia are complete opposites today. The Mag 7, I mean, they pretty much have every single thing you could possibly think of. The NASDAQ just got smashed right there at 937. The SPY picked all the way up until around 937, took a little bit of a hit, but now it's just going flat. It's kind of indecisive. It's indecisive as surprise, surprise. It's sitting right at this level. Does it want to hold 5650 or not? I have no thoughts or predictions of do we break or not. I'm just here to watch it. If it breaks down, great. That might be a very actionable play for all of us. And then if it breaks out, I'll just be looking to see how it reacts to the start of this transition zone. We are clearly in the bearish zone right now. I want to be very, very clear about that. I'm not currently looking for bullish opportunities, but we might be out of the bear zone if we somehow get sucked up into this overall GEX-DEX transition. And then from there, it's just a choppy day and we have to be even more patient. So for me, in terms of a quick little active scalp trade, day trade, something like that, it would be far, far easier if we just snap this recent low because I know we're bearish. I'm looking at the price action, which speaking of which, the 5 minutes is actually showing bullish right now, but the 10 and the 30 on the NASDAQ are bearish. And then ES is still bearish. So life would be easier in terms of a trade because you take this breakdown, your risk is the recent high, and you're trading with the overall trend anyway. If we push up, then you just need a lot more patience in this situation to wait for your trade to align for you. Speaking of which, I should get ready. We're about 10 minutes into the day, just in case this puke ends up coming. Well, the breakdown is here at 53. The breakdown is there at 53. I guess if you were to draw a little bit of this, you could argue that we're already showing a little bit of weakness because we might even begin being rejected at VWAP. So not only is it just like intraday high that you could use as your risk, but it's a VWAP smack. So I'm kind of paying attention to that. But as always, I'm trying to not rush anything. I feel like a lot of the times that I get myself into issues, it's because I'm rushing it and I just feel like I have to be in on the play. When in reality, my best trades that I make the most money on and take the least sweat on are the ones that I'm just like absurdly patient. 70. That's a 30 point. All right, I'm just bringing up the options flow over here on this other screen just so I could pay attention to price and options flow simultaneously. Potential higher low here, which actually might make my life a little bit easier now. Might make my life a little bit easier to play whatever the hell's going on. Oops. All right, haven't traded anything yet. Let me give myself a little bit more real estate to see what is going on. Just a little bit more real estate here. Pumped from 931 up until about 933. And since then, we've gone flat. And the question is, which way is it going to break? Which way is it going to break? I see the Mag 7 popped again, then took a little bit of a hit. The SPY is flat. The SPY was tilting and then caught a bid. Interesting. Right here. The SPY was tilting a little bit and caught a bid. It almost came back below the 5650 level. And then right now in real time, you could see the deltas popping. And what is it? It's actually some 0DT calls being closed out, obviously for today, 0DT, and then some 0DT puts being closed out. And then a little bit later, we had some calls being purchased. So both of those have the net effect of pushing the delta higher, and that has the net effect of market makers assisting to the upside to hedge what's going on. I'm seeing a big pop right now in the SPY in terms of delta right here. Yeah, some calls coming in. So thus far, ever since 933, the delta bottom left, top right. So we popped, we went sideways. It had a chance to break down right here at 941, caught itself. And then right around 942, you see this big spike in options volume. And that was once again, 0DT puts being closed out, pushing the negative delta up, and then obviously calls also being purchased, pushing the positive delta up. So they both have the effect of pushing delta higher, and that's exactly what we're seeing. Delta gets pushed, and then a little bit later, price follows. This is all just the mechanics of how market makers need to hedge out their books when they are writing a bunch of premium. So let's watch. We took out one resistance, held it, almost broke back down, bouncing up, and now we're coming up to this next region. And remember, I cut it in half because it's really this 5-point region between 65 and 60. So we actually did tag it perfectly. It's just I saw a lot of action at both of these levels, so I kind of wanted to play it accordingly. All right, we are at the high from 2 trading sessions ago, potentially getting rejected. Tesla showing a little bit of weakness now, a lower high, potential triple bottom here at 232. I almost took that trade. Because is it a secondary VWAP rejection is what I'm right here. We went up to VWAP, got smacked. Took out this recent low, but we didn't take out the low of this period. We didn't take out 52. Oh, are we going to get rejected right here? Of course, no one knows. You're always just looking for ideally you're on the right side of the trend, but most importantly is your risk in control. If your risk is in control, you can take a shitload of trades, and ideally if you have a good system in the long run, it'll all pan out for you. Maybe I'll watch this now because I don't necessarily, this is what I was forced into yesterday where I missed the first 2 trades yesterday. I was a little bit gun shy, and then I was basically forced to take a trade that was a bit of a counter trend trade. I thought things just looked a little bit exhausted, and that trade ended up hitting, which was nice. But right now, do I really want to fade this again? Because in the very, very short term, from market open till now, obviously bottom left to the top right. But what I'm really, really seeing is we're just getting awfully close to a potential rejection zone. Awfully close, somewhere in this 5-point area. I expect some profit taking to happen or some bears to step in. But this is unfortunately where we get into the very choppy zone. The fact that we're below it is why I have a bearish bias in the very short term. I'm looking for a rejection somewhere in here. Maybe it's a quick pop up all the way until the close from yesterday. Maybe that's what the market's looking for. Trend line for the trend line traders, you could watch that. Let's see. Does the market have enough oomph? Does it have enough follow through to actually get us back into this neutral zone? Right now, once again, in the bearish zone. Looking at the flow of the day, here's a look at the Mag 7. We just hit a delta high. Looking at the NASDAQ, it dumped, has not recovered. And looking at the SPY, we just hit a delta high, but it looks like we have a little bit of profit taking right now, which shouldn't be surprising because we're at that battle zone. Now, it could easily follow through. I'm not saying you should be married to this rejection play, but it is something we should note. It's definitely something we should note. I'm kind of watching this. I mean, just look at this. The NASDAQ just got a nice pump right there. And we saw that in the Mag 7. And then since then, it's slowed down, but still clearly drifting to the upside. I haven't executed any trades yet, especially if you're just joining in, waiting to see how this opening session plays out. I'm seeing the overall market's getting this nice push, but I'm seeing some major tech plays just really be flat. Palantir, bullish flat. Nvidia, bullish flat. Tesla, straight up flat. Broadcom, flat. Netflix, bullish, but kind of giving a little bit back now. Meta, straight up bullish after getting hit. MSTR, bullish. Microsoft got hit at first, but then recovered. Apple, bullish. Coin, bullish. ASML, bullish flat. Rumble, straight up bullish. Amazon, bullish. DJT, not really doing much. Qualcomm, not doing much. Google, bullish flat. So basically, a lot of things pumped in the first 5 minutes. And now the question is this going to be the rejection point, or is there more fuel left in the tank? And that's what we're all kind of awkwardly waiting around for. How's gold doing? Gold's once again climbing a bit here. Tesla, missing the memo that the market is in fact bullish. Missing the memo. All right. We are struggling exactly where we predicted it to struggle. Not that it's not rocket surgery to figure out how to do this. This is literally just the GEX-DEX transition zone and market makers. It basically means market makers are supportive of any move, and then you get there and they just stall out because like they're effectively going to be hedged. The math behind that is a lot more difficult than I'm making it sound, but basically you just need to know that this is a choppy zone for sure. Very much a choppy zone, and it's going to take quite a bit of an effort from the market to go from a bearish zone to a choppy zone. But if we do somehow get sucked into it, that honestly makes today's trading that much more difficult because it is a choppy zone. And choppy zones are exactly that. They just make you want to rip your hair out, and it's a lot of like whipping up and down, and you go from the top of the zone to the bottom, and it's a lot of fake outs. So it would be far, far easier if we just get rejected here and start to puke and then take out the intraday low and then take out yesterday's low, or at least test it. But maybe that's just not what the market's going to have in store for us today. Was kind of watching this trend line, maybe a fake out breakdown, kind of early to do these like shorter time trend line, so maybe we'll watch that or something like that. I don't know. I'm just trying to identify how strong this trend is and how long it's going to continue, and we know we're knocking on the door of resistance. Now when you come up to resistance, are you going to break or not? Hey, your guess is as good as mine. All I could tell you is this is a key region to watch. Do we get into the region? Question one. Question two is, if we get into it, do we stay, or is it a fake out and a quick dump? All I could tell you is we're knocking, and it's going to be up to all these guys trading to decide if we go through or not. So that's why you really can't predict it, because you don't know. And all I could tell you is price is coming up to a key zone, and clearly the options market is, well, I was going to say it's indecisive. We just got a little bit of a pop, but you can see we're really just going flat right now. Mag 7 is telling a different story. The Mag 7 is aggressively bullish since market open. Calls being bought, puts being closed out. The puts have been flat, but the call buying, not for this Friday, the longer duration call buying is really coming in right now. On the NASDAQ, same thing, trying to recover, not at a delta high, but it is trying to poke up. And then the S&P 500 hitting a fresh delta high, but having a tough time with the follow through right here because we're at resistance. So we're giving it a shot. I wouldn't be chasing it right now. If you do want to chase it, just keep your risk tight. This isn't my favorite trade, but if you're just basing it off the delta flow, I get what you're doing. I guess just in the back of my mind, I'm worried if we're going to get rejected right here because it is such an important zone and we haven't definitively like held it. So basically at this moment, I'm not seeing a good point to go long or to go short. I mean, clearly I haven't traded anything today, and if anything, it's just a bunch of question marks. I don't think we're seeing anything really that definitive at the moment. We're not really seeing anything definitive. We got a little market open pump right to key resistance, and we're at the resistance. So making bets at these key levels, you have a 50-50 shot of being right. Are you right and we break, or are you wrong and we get smacked? I would be willing to take those types of bets if there's other things aligning, but there really isn't. The 5 minutes bullish, 10 minute and 30 minute are bearish. The 5 minutes bullish, 10 minutes testing, 30 minutes still bearish. So the price momentum is not really confirmed. Well, yes, options are bullish, but then we're coming up to a key area. So like when there's that much mismatch, like what's the point in trading? The more things that align, the better off you're going to be. Timothy Rodriguez, AMC bullish to 560. Dude, shout out. Are you about to go balls deep on puts? No. I'm literally explaining to you right now why I don't think there's a good trade. And that's going to be most of the time in the market. Like if you were to split up like percentage wise of, okay, when's it a good time to take a trade versus when's it a bad time to take a trade? I mean, 90+% of the time, you're going to be in the, oh, it's not a good time to take a trade category. Most of trading is sitting around just waiting for that setup. So, I mean, I get it. I'm there with you. You feel that pressure to trade because you're just sitting there watching it develop. But most of the time in your trading, you're just actually doing nothing. Most of the time, you're kind of doing what we're doing right now, is saying, oh, wow, we just got back into a zone that's literally truly no man's land. We're just in no man's land right now. We haven't taken out the close, which we're getting very close to it. We didn't take out yesterday's low. We puked right at open, and we didn't really get anywhere. A quick rubber band effect back to the open interest level, and then we found a base there at 941, and then we pumped up into this transition zone where who knows what the hell is happening. So there we go. We're just waiting. We know that the market, for whatever reason, and there's a lot of theories on this, has a high proclivity for hitting the previous closing value, which it seems like the SPY's about to do. So that's a reasonable target. If you're like, okay, I like this 941 reversal, it seems like it's holding, your risk is recent low, maybe play it up to the transition zone, maybe you scale out there and then the rest of it for that, or maybe that's your first target. Those are all very reasonable trading methodologies. And I don't mind that trade at 941 because your risk was so close. Most of the time in trading, or a lot of the time in trading, you can pretty much survive whatever if you're keeping your risk in touch. So even this, you're like, you know what? I'm going to take a bullish trade even in a bearish zone, which we clearly were. That's still acceptable because there are points where we have trend reversal. So if you catch it and you did it with minimal risk, okay, it's still going to work out. So yeah, you can get into the nitty gritty of the options chain and the gamma transition and dex transition. You could do all of that and it'll probably help you in the long run. But in the short term, if you're like, nope, I just keep taking low risk trades time and time again, you're still going to probably be doing pretty good. So even not looking at the EMA or the transition, if you're like just looking purely at price and you're like, okay, we pumped, we pulled back, and we tested again, and then we started a breakout. I really don't mind this long here at 941. It looked like we were going to break this previous high, and the most important thing is your risk was very, very well under control. You had very minimal risk, and right now the reward to risk ratio was clearly favorable to you. So yes, you could do all this other stuff, or if you're at the point where you're like, you know what, I'm just trying to learn it all and I don't quite get it, that's fine. The major thing that I think we could all understand is just time and time again, are you taking reasonable risk? That's what you need. Reasonable risk, and you will survive this game. All right, we're getting a very methodical walk up ever since that 941 breakout. So we had true trading at first, then we went flat, and then at 941, someone flipped the switch, and we're just seeing basically a slow, persistent grind to the upside. It seems a little fictitious to me. Tesla's going completely flat. NVIDIA's giving it back. And it's just like so perfectly getting walked up, and you can see it almost here in options as well. Once again, here's the Mag 7. Actually, the Mag 7 is going flat as Mag 7 prices are turning ever since 9:53. Oh, what time is it? 9:56 now. I wonder if we're going to get a turn of the hour flush. Not every single day, and I don't have the exact odds on this, so it might just be anecdotal, so please take what I say with a grain of salt here. But it does seem like at the turn of the hour in the morning, not a lot, I shouldn't say a lot, but it seems noteworthy how many times we get price action completely changing, whether from bearish to bullish or bullish to bearish. So I wonder if there's going to be that classic 10 a.m. just switch. Like I said, I don't have the stats on it, so maybe I'm seeing things that aren't there, but I feel like we've noticed it enough, especially all of us in here, that like at 10 a.m. we're like, oh damn, that there's that like reversal. So let's just be calm here. The SPY is just so perfectly being walked up. This tells me someone with size, or in aggregate, someone but slowly but surely is either taking off a position or putting on a position, obviously benefiting the bulls. And I mean, here's the exact flow of what's happening. We had calls starting at 9:33, the calls pumped all the way till 9:53. It was basically a 20-minute just push there. And then since then calls are now flat. But 9:33 to 9:53 calls being purchased. At first it was 0 DT calls, then it remained to be 0 DT calls, but there was actually more longer duration. And actually, as we're speaking right now, they're trying to push again. Puts have been pretty much flat all day. So the movement we're seeing in the S&P 500 is pretty much exclusively a combo of 0 DT call buying, which was that first push. And then we're kind of drifting up from longer duration call buying right now. But this entire time that it's playing out, no one's really touching puts. The NASDAQ, a decent amount of puts being closed out. Interestingly, at 9:37, a bunch of calls were sold. And then right here, puts are being closed. That's weird. And then the Mag 7 had a really nice pump up until about 9:50. And then since then, pretty much flat. So the movement we are currently seeing really does relate to specifically S&P 500 calls. We're not really seeing it scattered elsewhere. At first we did in the NASDAQ, and then we also saw it in the Mag 7, but that is now gone. Like the thing that is pushing the overall market right now is specifically calls on the S&P 500. And that's why you're seeing things like Tesla flat, Nvidia flat. The bets aren't being made really on these individual names, at least not the individual popular tech names. It is the overall market. So it's probably these interesting subsectors such as energy. Energy's pushing. Financials are really pushing. Utilities are flat. Industrials are kind of pushing. Healthcare is up. So, I mean, energy and financials are two of the other really big sectors, such as tech. I mean, look at them. They're just ripping. Energy and financials are just absolutely pushing. And then the fact that tech kind of pushed, but it pushed and now is flat, that's why the SPY is looking so good right now. It's just these other sectors are really going, specifically energy, specifically financials. Healthcare is also having a nice push. Real estate had a nice recovery. Consumer staples got sold off, but now recovered. Consumer discretionary is also ripping. So tech's having an all right day, but it seems to be the other subsectors of the S&P 500 that are really, really pushing this up. Whoa, Tesla just got a bid. Today's a consolidation day. There's a very high likelihood of that being true just because tomorrow is quadruple witching. Today could easily just be like a whipsaw BS type of a day, like without a doubt. That could so easily happen just because it's kind of the day after effect of the Fed meeting from yesterday. And then tomorrow we have quad witching. So people aren't really going to be trying to do like the most. They'll probably make their big decisions tomorrow, not necessarily from a retail standpoint, but from like a larger like investment Wall Street standpoint. The big money's moving tomorrow. Of course, they're going to be watching the markets today to see what's going on. But if today is... I honestly wouldn't be surprised if today ends up getting pinned to yesterday's close and we effectively just go nowhere. Like I really wouldn't. Which of these stocks is going to blink first? I mean, if you're looking to be bullish, obviously the SPY is a bit more bullish than the Qs, but it's really the energy and really the financial sector that's looking good. So if you're looking for bullish opportunity, you might want to pay attention to something outside of tech on a short-term basis. But like I said, this is my overall transition zone. I wouldn't mind actually taking some bullish trades if we can break and hold 5,700. I'd push it up to 5,720. I would like that play, but I don't really want to be messing around too much in here just because it's so easily we could get pushed out or we could get pushed down. And I just don't think I have that good of an odd. Like, I don't think the odds are that favorable for me to be successful unless I see something like really, really changing in the options market. I see the options market pumping right now, but they've already been pumping. And then you have to ask yourself, like, how much more money do they have in the coffers to keep it going? Because they've been pumping it ever since 9/31. So, like, are they using up all their money just to get us in here? And then we end up getting stuck. So I'm kind of watching this. This is the uneasy, choppy zone of the day. Once again, it's the GEX transition. It's the DEX transition. At least it was as of market open. Let me update this. Let me see where the current levels are. Loading. If you happen to grab a bullish position, we had a natural target at yesterday's close. And if you have some runners, I'd be watching 5,700 would be my next realistic target. The whole chain is still put dominated. So for today specifically, yep, I'm standing by all these levels as of right now. That I like that. I like that. I like that. Yeah. Yep. This is pretty much the layout on the day. The key levels I'll be looking for. We started off with bearishness, quickly got sucked back in, and then grinded up into the chop zone. Don't be surprised if, especially on the first attempt, if we're smacked right at 5,700. This is a very nice recovery of 5,675. So that's actually a really nice recovery. But I guess the 10 a.m., we were talking about the 10 a.m., like the turn of the hour transition. It transitioned into being more bullish somehow. So there was a transition. The transition was to go from a grind up to a quick pump. And we're just seeing this. It's not a Vanna rally, is it? No, puts aren't being touched. So this is what we're seeing right now is purely just aggressive call buying. This is puts. The puts are not throwing in the towel yet. They're not throwing in the towel on the 0DT. They really haven't traded it. And the longer duration puts are also perfectly flat. What you are seeing is just right here. The 0DT calls are getting more and more aggressive on the S&P 500 complex. The NASDAQ is telling a different story. Puts are getting closed out there. And then on the Mag 7, the puts look really funky, but focusing on the calls on the Mag 7 are back to grinding up. They took a little bit of a breather, and then around 9:59, they started picking back up. And we're just getting that pump. That pump. Actually, that was a pretty decent trade there, too, at 9:58. A little bit of a breakout. The SPY got going. We pushed up. I probably should have been paying attention to that trade. 9:58, this little down, little market structure shift right back to the upside would have had a nice fill by 10. Yeah, that was a nice trade. So I completely understand the idea. Not my trade at 9:41 going long. I like that. And then the trade that I missed was actually going long at 9:58. I definitely should have caught that one. I guess I don't even know what I was doing. I wasn't paying attention. But going long at 9:58 was also a pretty strong move. Like I said, I understand the sentiment of going long at 9:41. Little ballsy, but you had reasonable risk, and then a legitimately good trade was going long at 9:58 on the Qs. The SPY, you were buying the new high. Don't really like that the most. I would have preferred it at 9:49, but we'll see. Kind of watching this now. We know that there's probably going to be a little bit of a battle up here. Once again, here's the flow. We'll see if it's ever calming down, which we have some profit taking coming in now. Like I said, I can't express this enough. This entire zone is a choppy mess. And I know it's wide, which is unfortunate, but that's what happens when you have vol that's so high. I know VIX is coming down, but inherently it's still a high magnitude at 20. So don't be surprised if we're just kind of ping-ponging around in these larger ranges. Grind to the upside. Bullish, then a grind, and then it took an entire second win starting right at the turn of the hour. Grinding. Patience. I haven't done anything yet. I haven't seen a trade setup that I liked, a risk-reward situation I liked. I did miss this at 9:58 on the Qs on the NASDAQ. That was a beautiful long. I just missed it. To explain it better, 9:58. What I'm really talking about is you saw this spike and then this pullback right there, 9:58. Because if you took that, it was the recovery of the EMA and your risk was so close, and then it just exploded right in your favor. But not even knowing that, that's just a good setup. We are trending higher highs, higher lows, a little bit of a pullback, and then you're waiting for it to turn back into trend with the overall market. And look at that. You had well-defined risk. So you could have entered at 912. Your risk would have been 94. So you're risking 18 points and boom, it goes in your favor. You could have easily locked one in on this pump. And then if you had multiple, you could have a runner right now. Your risk could be set to 64. Your risk could be set to 87. Regardless, that was a great trade. So that's the one I should have taken. I just honestly wasn't paying attention. I guess we were looking at options flow or something at that point, but that was like actually a pretty sick trade. And now Are we stalling out? I feel like every single time I say, are we stalling out, 10 minutes later, it just gets another pump. So patience. I'm looking to wheel a couple contracts worth of Google and want expirations about 30 days out. Given the April 2nd news, which way would you start? Well, the wheel strategy, like, it shouldn't really be related to news. That's just more of a it's a methodical thing. And also, when you're saying start, I mean, do you want the shares right, or are you trying to collect the premium right away? So that's not exactly how it works. I mean, I guess I don't know what your goal is. Do you want the shares right away, or do you want the premium right away? I guess I believe April's going to be very bullish, in my personal opinion, but I guess I don't know what your goal is with that. And most of the time, like the wheel, you are not like trying to predict news. Wheel is just, it's a very methodical process, and you're just doing like whatever side of the wheel you're on, you're just doing it time and time and time again. It's generally not being associated with like a news prediction or a market prediction. You're just ping-ponging from one side back to the other. Is there a gap on SPY at 5,730 or somewhere near that price? I don't know. You're going to have to look at the chart. Is there? Around 573? No. You would just see it on the chart. Unless I'm missing something, no. I see no gap at 573 on SPY. All right, SPY still getting that pump to the upside. We're still in that transition zone. Above this, not only is from an options perspective that then bullish, but look at the 5 minute, the 10 minute, the 30 minute, the 5 minute, the 10 minute, the 30 minute is being bullish. So I'm kind of watching this. I'm either looking for the rejection and the puke out of the zone, or the push above and the hold on the zone, and then playing it up to 5,720. So I really don't care which way this breaks. That's a lie. I'd prefer it breaks down, just because I want vol to expand, and you make more money on options when you have vol expanding instead of getting crushed. So more money is to be made to the downside playing options than to the upside. That's just a basic understanding of vol. You make more money if vol expands in the direction that you're playing. So I'd prefer a break to the downside, just because there's a lot more money to be made there. But I'll take any clear break, just because that's the trade setup that I'm looking for. I will take any clear break. All right, Mag 7 slowly grinding to the upside. NASDAQ slowly grinding to the upside. SPY slowly grinding to the upside. Ever since 1010, we have a little bit of profit taking, but not much. I mean, you can see that there's only a baby amount of profit taking. Nvidia hasn't really gone anywhere since its initial push. Meta's up. Meta's actually looking good. Matt, did Matt just say he's about to transition? Yes. Do you still see it going down to buy the dip, or is this the dip? Well, it's clearly not dipping, but I think it is, in terms of like your investments or a longer term swing trade. I am not doing that dip buy yet. I'm not changing. We have not had quadruple witching. We have not had the tariffs. We have not had the results of the JP Morgan position. I don't know why so many people are antsy to punt a large percentage of their portfolio long now before three major events: quadruple witching, JP Morgan position expiration, and tariffs. Like, what's the point of taking that risk? I think one of the biggest issues with trading is people are they're willing to take too much risk, or they're taking risks that they don't even realize that they're taking. But that, by definition, is a massive amount of risk. Punting a big percentage of your portfolio long before quadruple witching, JP Morgan position, and on top of that, we have the April 2nd tariff news. I have a question about Apex. If you make too much on a funded account and won't close the account right, only affects withdrawals, because I want to build a base ASAP. Of course. How could they close out an account for you having too good of a trading day? Like, yeah, I don't know where you're hearing that from, but no, if you make too much money, they don't close you out. It just could have an impact on your withdrawals. We got ants in our pants. I understand that feeling. This is quite the pump we have going on right now. The market, quite the pump. . Yeah, I mean, I'm just kind of watching this grind. We got a little bit of that overextension right at 10. Some sort of buy program just ripped it at 10. And then the program was clearly just done running. And since then, we've just been flat. So watching some of this, I don't know if this is the right trend line. I don't know. There's a little bit more art than science when it comes to some of these trend lines. So kind of watching this on the SPY, kind of watching this on the Qs. The 5-minute, 10-minute, and 30-minute are now bullish on ES. 5-minute, 10-minute, 30-minute are fighting to be bullish on NQ. We have not broken this. We're still in chop city zone. We're still very much, I don't need this trend line anymore. But this white zone is the kind of, think of it as like the drunken stumbling zone, as in just indecisive. The market makers are basically perfectly hedged as they normally are, but right now they're not going to be influencing the market to the upside or towards the downside. This is chop zone, and the way I like to think of this is if you're throwing on a trade, of course you always have to have minimal risk, but right now, just like the odds, you don't really know. I mean, we could push up here, get rejected. We could puke down here. We could bounce off of it. You don't know how it's going to interact with. We went from red to green. Generally, that's resistance. We just pushed above it. Doesn't want to retest it and bounce. It's just like, this is the choppy BS zone where, as I alluded to before, it just makes you want to like rip out your hair. So just having the patience to wait for something to actually develop rather than just, I don't know, like forcing a trade. Like we've all been there where you're like, okay, I've watched it a lot. I feel like I should trade now. It's just simply not a time to trade. I don't mind the trade once again at 941. It's a little ballsy, but it worked. On SPX, I also don't mind it at 949. And then if you're following the NASDAQ, I don't mind it at 958. So I think the last time there was like a legitimate short-term trend following, minimal risk, high reward setup was the Qs at 958, the SPY at 949, or the SPY or the Qs at like 941. But I think the strongest play out of all those was the Qs at 958. But since then, all we did was pump, and now we're going sideways. You can't really be throwing on a trade when we're not doing shit. Like, I guess you're kind of looking for other plays like Meta. The fact that this is having a $18 recovery, a 3% pump, the recovery of a lifetime right now on Meta is just going. Broadcom's getting hit, which is interesting because Nvidia's up. Broadcom is down 1.9% when Nvidia's up 0.8. I find that interesting. I also find it interesting that the the Qs, the NASDAQ is going to be having its second official test of the trend line. So market open, we bounced at 957. Is it going to hold, or is it going to come back and retest this closing value? Time to blow up my account. Please don't do that, Bear Palm. Please don't do that, Bear Palm. Please don't do that, Bear Palm. Oops, I didn't want to do that. Wrong button. Oh, just seeing if we can find any low risk opportunities. I don't necessarily want to fade it. This is the exact trade I was forced into yesterday. Could be a classic rejection right at 20,000. So the NASDAQ, the NQ contract is trading right at 20,000. Trust me, there are many people paying attention to this level right now. Will it hold it? Won't it hold it? You could see we kind of ripped right up to it. And that's where things started to get choppy. A lot of people playing this massively important technical, but more important psychological level. So right at 20,000. That's maybe not the worst trade. Do I want to take this? This is reminding me of the 958 setup. Hang on, let me double check something before I sling a trade here. All right, this trade right here, like I said, reminding me a lot of the 958 trade that I liked. Right here, when I was like, oh, okay, like we're kind of like we pump, had a pullback, and then pumped again. Like just reminding me quite a bit of it. Let me remove this so you guys can better see what I'm talking about. All right, the first one already hit, but you see the similarities? We pump, had a pullback, try to get going. Then we had a breakout that maybe said, oh, are we going to get going? I'm seeing a lot of similarities. We pumped, then we had lower highs, lower lows in the very short-term frame. Then right here, I saw a pump. I was a little late to enter by a couple points, and I'm just, I guess, being aggressive with it. And there we go. And we'll see how it goes. But pretty much it's just a carbon copy of what I saw at 958. Now, will it play out the way it did at 958? I have no idea, but I was already able to lock in some. It looks like I locked in 230, 240. Do I want to set a recovery of a key level, 20,000? The perfect entry would have been around 20,005. So I was a little late to it. Come on. Maybe I'll just move my stop up to this dip. Or that's kind of a big pump there. I'll just give it a second. We already locked in one. I went long 2 contracts, as I explained to you. It's outside of my normal trading. It's definitely outside of my normal trading. Like generally, if I'm trading more than one, it means I'm on tilt and I'm doing something stupid. But as we talked about quite a bit of yesterday and the day before, and I have a better explanation of it coming out tomorrow on the Velvet Kohrs channel. So be on the lookout for that. But what I've decided is the optimal thing to do on these, I believe, is to build up a base as quickly as you can. And I am looking for about a 20% drawdown. 20% on 50K is 10K. So I need to get about a 10K buffer before I can be a bit more comfortable, because when you start out, you only have a 2.5K drawdown, which is 5%. And truly, some of the best traders in the world, well, I don't know of any trader in the world that doesn't have a 5% drawdown. Like the best traders in the world can easily have a 5% drawdown. So because of that, there is an aspect of like, okay, can you just be like lucky or aggressive right at the out of the gate to try to make that money? So that's what I'm attempting to do. It might take me a couple tries. I have no idea. Obviously, I would love it if it happens on attempt number 1. That would make me feel quite a bit better. Oh, we're coming back down to my... Oh, do I just want to put this stop in, or do I want to give it room? Because if I put the stop in, that's really not that much of this range. Like this right now is the reasonable stop. So am I being defensive or am I being smart? Because like this is the logical risk point right here. It's just one big pump and you could easily pull back 50% of it and still be fine. I'm going to give it a second to breathe. Let me just double check if I'm being smart or stupid. The Mag 7, long and strong. The NASDAQ got clipped, bounced, then got clipped again. The SPY pushed up, giving a bit of it back now. I'm not the biggest fan with that. We haven't hit 5,700. I mean, this price target should hit before 5,700. And I do feel strong about this being a test zone. I think the market would be naturally inclined to examine the supply and the demand there. And we got as high as 5,696. The question is it going to pull back before that? I feel at this point a good chance of that test, which if we do test it, even though I feel like there's high odds of that test, there's no rule saying it can't pull back first, which is what I'm a little bit concerned about. So ideally, we bounce off of this and I could just move my risk up to this low, and then I'd only be risking 4 or 5 points, and then I'm golden. 4 or 5 points. Yeah, basically what I'm looking for is for it to take out 45. 45. All right, we don't need this. Once it takes out 45, I can move my stop up. Which we have not yet. All right, just cleaning up the chart a little bit. We dipped a little bit here. I'm really hoping this low is taken out. What I would love to do is use this low as my risk, but I can't really confidently do it until we take out this recent high at, once again, 45. So what I'm looking for is for us to go right up here. I know the screen's a little bit busy and there's other things going on, but even this, that was a nice pump, but we didn't get that much follow through. We didn't get the most follow through. SPY options looking a little bit questionable. All I can do is control my risk. The die are in the air. We'll see how this plays out. Potential little higher low in the very short time frame. Potential, but really we're just getting sucked into the EMA. Yeah, we're just right at this EMA on various time frames. All right. I could be a bit more aggressive with the stop management. Instead of a new intraday high, I could do this trend line break. I could do this little trend line break and then move my stop up. I honestly, on this trend line break, if I wanted to, I could be super aggressive and move the stop up to break even. And even though it's technically not where it should be closer to like 13, which would be a little bit of a risk. Like I said, 4 points. If I just want that psychology of not having a losing trade, that would be a perfectly acceptable thing to do, which it is a crazy Thursday. It is a crazy Thursday. The Mag 7 still long and strong on options. NASDAQ long and strong. S&P 500 also long and strong. All right, we broke that trend line. I'm going to do the aggressive stops at break even. So no matter what, I'm either making this money or the worst case scenario is I keep the gains from the first contract. So we're going to see how it's going to go. I feel like this is the smart way to do it. I feel like there was a lot of patience in this play waiting for exactly the setup. And I kind of called out the trade that I missed. And then I saw the exact same setup again. And I was like, that seems familiar. And then bada bing, bada boom. Patience pays. Patience pays. In fact, I could put a dollar value on it. It pays $25,000. Folks, you saw the entire explanation. You saw the entire reasoning. You saw the first trade that I didn't like, but you could have taken. You saw the second trade that was very good that I wish I missed. And then you saw the setup. You saw me even thinking about the setup of like, should I take it? Should I not take it? And then boom, you saw the entire execution, $25,000 locked in, fully explained in front of you. I don't think there's anyone else on the internet doing this. I don't think anyone on the internet is explaining it so perfectly, locking in profits, and it might run. But the point is I have no idea because we're at resistance. When you come to resistance, the bet isn't does it break out or does it not? Because you have 50-50 odds. You're playing it saying, oh, okay, that's just like in an important level. So right here, maybe it breaks, maybe it doesn't. I have no fucking clue. To be completely honest with you, I have no clue if this breaks out or not. All I can tell you is this: we've just completely shouldered our way through this transition zone. We started off in a bearish area, and we are now getting through the transition to the bullish. Now, there might be profit taking. The bears might step in here. I don't know. All I can tell you is this is a key psychological level, a key technical level, and a key options level. So you have to wait. You have to have that patience to wait. If we hold this, yeah, bullish all the way up to 5,720. And if we really get going, we're talking about 5,750. And on the other side, if we get smacked, okay, look for the pullback to either the bottom end of the zone or yesterday's closing value at 5,675. It's honestly that simple, folks. It's just, don't be married to one position or the other. Have your bull case, have your bear case, and always just execute with minimal risk. Like, that's what you do. That's what you do. That's what you do. The bears are looking famished. Well, they were, but they weren't doing anything. They weren't looking famished. They were actually truly just doing nothing. And they started buying puts again at 10:05. This is on the S&P 500. You're saying they're looking famished. The bears are actually, this is the most puts they've executed all day. So be careful. You're saying they're looking famished, but I'm actually seeing bullish strength come in right now. Look at 0 DTEs are being bought right now. Like, this is the lowest put delta that we've actually seen the entire day. So, and it's happening right at a key level. If there was a point where it was dangerous to be going long, this is the most dangerous point of the entire day, because you are buying it with, by definition, the most risk, because we're the farthest away, because you're buying it at an intraday high. So by definition, you're the farthest away from whatever your risk point is, and you're doing it at probably the most important open interest level for the bulls. As in, there's a lot of people who went from out of the money to in the money, and you don't know if they're going to hit the cash register. So if there was a statistical definition, the most dangerous time to be bullish, it would be attempting to go on this first breakthrough. And it might work out, but it's just a dumb play. It is it's just not a smart play. Of course, you can make money off doing dumb plays, and you can lose money on smart plays. Like, just being smart or dumb doesn't mean you make money or lose money. They sometimes they're correlated and sometimes they're not correlated. But I'm just saying, looking at what we're seeing here is we've had a nonstop rip to the upside. And then on top of that, we're seeing puts, 0 DTE puts. Let me switch to the 30-second. They've been purchased from 10:05 until now. There's actually more puts in the system. And you could simultaneously say, well, there's also more calls in the system. Yeah, both are true. People are aggressively buying puts and people are aggressively buying calls. And right now the bull side is winning, but it's not like someone said the bears are fatigued. They're not fatigued. They're actually at the most confidence they've been all day. So because of that, it's just like you might be taking on undue risk that you're not maybe like confident in, or I guess like just knowledgeable of, or just even noticing, because I'm seeing quite a few. What's interesting here is it's the Mag 7 that actually these puts are capitulating. So if you're talking about the fatigued bears, you would be 100% correct to say that with respect to the Mag 7, because all day these puts are being closed out on the Mag 7 and calls are being opened. So the combo of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, I fully agree if you're saying it on that side. It is very true to say that with the Mag 7, not so true to say that with the S&P 500. So like it depends on the underlying that you're looking at. And I trust in the NASDAQ the least because it seems really choppy and I think it gives a lot of fake signals, which is why I like to look at the Mag 7 and the SPY. So what's true between the two is there's clear bullish aggression from market open till now on the S&P 500 complex and on the Mag 7. Calls being bought on the 0 DTE and the longer duration, and same thing with the Mag 7. Calls being bought for tomorrow and on the longer duration. What's different is how the puts are being handled. Puts are being capitulated on the Mag 7, but they're actually being purchased, and the bears are getting more aggressive on the S&P 500. So I would say that's like the noteworthy difference. And I think why it's the difference, they're buying puts here because they're just betting on the rejection. And then if they're wrong, they have like a small loss. They're punting into puts now, and they're probably risking yesterday's high or this key level. And they're just saying, okay, I have this much risk, but if they're right, they get to ride it all the way back down. So they might not even be playing the high odds situation. They might be saying, okay, I have a 30 to 40% chance of this happening, but look at the risk is so minimal and the reward is so great that even if they're right 1 in 3, 1 in 4 times, this play will, if it hits even 1 in 3, 1 in 4 times, it pays off all the times that they were wrong. So it makes sense that we're seeing these puts now enter. I'm confused on why they started entering at 10:05. I think that was a little bit early, and they even entered more at 10:10. I think that's a little bit early. I get these puts. These other puts were seemingly early in my book because they got in before the test, which I don't know why you would get in before the test, but hey, I guess that's just what they want to do with their account. But for the puts that have been entering since 10:24, right, ever since basically right here, let me zoom in, these puts, this flow to the downside, that's a smart move. It really is a smart move because all they have to do is risk what? 6 points. They're risking 6 points for a potential play all the way back down to the bottom side of the transition zone, which would be, I don't know, a nice gain of 40. So it's a 40 reward to a 6 risk. Like that, that's nice. I mean, what's that? 6.5 to 1. That's just a smart play. So that only needs to work literally 1 in 6 times for them to be net profitable. So they might not even have high confidence in this being the event that works, but using that methodology time and time again, as long as they're right, more than 1 in 6 times, they will be net profitable just because the reward is so much more favorable than the risk. And simultaneously as that's happening, not just focusing on the puts, but let me bring your attention to the calls. The call buying stopped. The calls who were rushing this all the way up to 5,700, as they got there, they said, oh, okay. And they are seemingly running out of steam. You could see that by the calls going flat. Once again, if you want to track this all yourself, you don't have to take my word for it. Check it out. Spot Gamma giving you 80% off. We are the only community on the entire planet that they are offering this deal to. So check it out. Pinned to the top of chat, in the description of the video. You can get 80% off and test it out and watch exactly the flow that I'm watching and kind of get the breakdowns that we're all getting. Oh, what is this one? Trump live today at the Digital Asset Summit. Crypto pumping. We actually might be getting a bit of a breakdown here. We might be getting a little bit of a breakdown here, Tonto. 5 minute, 10 minute, 30 minute, 4 hour, all bullish. 5 minute, 10 minute, 30 minute, 4 hour, all bullish. All 8 time frames, the 4 on ES and the 4 on NQ, the price momentum is favoring the bulls, which is no surprise because we fucking just pumped for about an hour straight. But we pumped enough to get to this key zone. If you rode your calls up to this and you are trying to hold above it, and you didn't take any of your profits, you are being greedy. You should have been scaling out at least some at that key level. First of all, I wouldn't have even gone long before we actually hold it, just because I know this is the transition zone. But if you got in once again at 941, 958, or this break at 10, I'm not really going to be in agreement with your entry. But I would say if you took any of those, you have to scale out at some of these levels because you just don't know if you're going to get rejected. Of course, there might be that chance that we rip. Yeah, obviously. But what about the other chance that we just get completely smacked? It is a massively important level. So I would say at minimum, you'd have to lock in some at this key level. And clearly the market agrees because the call stopped and puts are being purchased. When is Trump talking? Is it right now? I mean, I could put it up if he's talking right now. I mean, I don't know why everyone keeps getting so excited about the administration's conferences and talks with crypto when none of them have delivered. None of them have delivered whatsoever. All of these have actually been buy the rumor, sell the news, and they've all just, all of crypto has fallen after every single crypto related thing related to this administration. Every single one. And maybe this is the one that bucks the trend, but I feel like they're hyping them up as like this like exciting event. And then they're just like nothing. Here, let me talk, find. So it's pre-recorded. Can you find this Trump crypto link, please? Trump is going to be like, someone said something about Buckcoin. I said, who is Buckcoin? Hereby name in Trumpy coin, the best tremendous coin in the world. I mean, it's hard to beat. It is tough to beat Buckcoin. Delivered or not, hype often moves stocks and crypto. Yeah, no shit. And then it falls after. If nothing's delivered, if the actual event doesn't meet expectations, that's actually when you get the capitulation to the downside. I'm telling you, if you didn't take some of your profits here, that's just not a quality decision. And I'm saying that now. I have no idea. We could easily keep pumping and go all the way up to 5,800 for all I know. But still, in terms of the decision making, when we got to that point, not knowing any future bar, when we're at that important of a level, if you're not locking in some of your profits, what are you doing, dude? What are you doing? And even if you're like, you know what, I'm not going to lock it in, but a trailing stop loss, okay, I think that's a fair argument. But your trailing stop loss would be 5692. You'd be using this recent low. So you're basically praying that we don't make a fresh low here. And if we do, you got to be smart about it, because what I can tell you is that puts are still being purchased and no one is buying calls right now. The call buying stopped at 1026 on the Mag 7 and it stopped at 1028 on the SPY. Right here, we are trending down as people are buying puts. There are 0 DTE puts being purchased right now in real time to basically, they're playing the rejection of 5,700. Does anyone have this link? Does anyone have this link? Here, let me go to the 3-minute, the Trump link, the Trump crypto link. I have a sneaky suspicion that's going to be another buy the rumor, sell the news event, but maybe this will be the first one that bucks that trend. Maybe Trump's gonna, how do I find it even? Where are we at? All right, let me see if where can I find said link? Trump crypto speech. Trump crypto speech. Come on, load. Donald Trump to speak at Digital Asset Summit. Thursday. All right. Digital Asset Summit. President Donald Trump to address Digital Asset Summit. Where is how? The address will be available to be watched through the event's live stream. Find it here on X and here on YouTube. Digital Asset Summit. All right. Let's see if we could track this down. I'm told this is it. I think we found it. It is Blockworks Digital Asset Summit 2025, New York. And I guess he's supposed to be talking around 10:40 is what you guys are saying in chat. So I think we found it.
Joe. So it is too big. It's too big to describe. It's like trying to describe the internet protocols and the web protocols. It can do everything.
Meta's just going. How's Bitcoin going to this? Bitcoin getting a decent pop into this as well.
And so there are people who can grok all of that, who can hold a lot of the complexity and the potentiality in mind, but most people are not going to be able to do that. And so we have to.
All right, is there a better stream of this?
On applications that a user or a company cares about. And so we are at our broadband moment, and we will see
it's a bet to some extent on tokenization, on stablecoin adoption, and on decentralized finance. And so that, I think, resonates, but it does take a fair bit of education. And so we've been on that journey, and it's going to take, I think, more time.
Open source.
Yeah.
So all right, found the official one.
Same thing. Open source, open.
Shout out Chaos for grabbing that. Thank you.
And the web was a revelation to people. It felt.
Here's a quick look at the flow.
And
call buying started again at 10:36 on the Mag 7. NASDAQ is looking messy, and a little bit of call buying on the SPY, more so on the Mag 7. Some puts being closed out a little bit on this retest of the intraday high.
Prizes to be won by companies that are building these social networks, and then they start adding AI to these social networks.
Will it actually get out of the transition zone? This is the $1 million question.
And they figure out ways to run
smacked?
psychological experiments on the population or addict the population to doom scrolling, and adding mobile to the Web 2 protocols and e-commerce, etc. Turned it all into.
Does not really want to get going here.
Still an amazing global resource, but something that has increasingly grown toxic and has been destructive of the fabric of society. And so you can think of Ethereum as a major foundational.
Why is this guy
component of
so
Web3,
boring?
And Web3 is the re-decentralized web. So Web3 is open source, open protocols, open specifications.
Chop. Meta's looking great, though. Meta's liking whatever the hell's going on in the world today.
Buying for the community rather than in an adversarial perspective.
As of now, SPX holding this key
the
5,700 breakout level. Watch it closely.
Platform that will continually evolve to onboard the whole world, from institutions to
Web 2
players
Trump?
to all consumers. For both of you, what is on your wish list for what Ethereum needs to accomplish to really cross
why the
the
fuck are they
chasm
talking?
for full
This is
institutional
boring.
adoption?
Like, how? I don't even think anyone could be intentionally that boring. Can anyone in chat confirm that Trump is talking at 10:40? Because it's 10:40 now, and I don't know if we're on the right one, the wrong one. I just want to make sure we're on the right stream because I can't listen to those guys much longer. Trump. Trump crypto. Breaking: Donald Trump will officially announce 0% tax on crypto today per Fox News. That sounds like absolute fucking bullshit. But that would be wild. rumor. So it's a rumor. Someone's like, why do people do this? Breaking as if, no, it's a fucking rumor that they've been talking about forever. And we still haven't heard anything. Tomorrow, Donald Trump will become the first sitting U.S. president to address a crypto conference at the Digital Asset Summit. All right. Will he say anything this time? I'm not seeing any live stream, so I don't think we're missing it. But did anyone else? Everyone's thinking that's going to be zero capital gains, which if that is announced, that would actually be wild and crypto would fucking rip. That would be wild. Bring him on, dude. What are we waiting for? Do I see anything? Bloomberg. Okay, I'm not seeing it yet. What is this one? Okay, it's the same thing. We found two different streams, one directly on Blockworks, one right here. I don't think he's up yet. I think we're all just kind of like awkwardly waiting for them to... Dude, they're so fucking boring. We did just make a new intraday high on SPX. It is trying to hold this. Like I said, if you're playing this, like let's say you took this dip breakout and you're risking 95. I do like 5,720. Yesterday's high is at 5,715. Next one is at 5,720. I'd be paying attention to that. $5,720. That's the target. How are the puts looking? Puts are still being closed on the Mag 7. The NASDAQ is still messy. The SPY, we're at that same delta reading we were when we first broke out. And the puts are, some of them are throwing in the white flag here. Some of them, a little bit of a pop as the SPY is still just grinding up. Is he talking yet? Dude, these guys need to shut the fuck up. Is there just no volume? Oh.
Networks are helping with that. This technology for our different research teams is wonderful. So we do a lot of thinking about things that they care about. XQ is one of them. Balances, max effective balances, reducing the number of validators, reducing the number of the amount of bandwidth necessary in these peer-to-peer systems. If we're looking at the ETFs and wanting to add yield, one of the major dangers of staking is that you could be slashed, and that's the way it's supposed to work. But if we can do things to evolve the protocol or just evolve how the ecosystem works, for instance, we have 5 execution clients that all sync to one another according to a specification. If we can make sure that they are all the activities
everyone's
very
waiting
evenly
for Trump.
I
hope we're just not wasting time. Like, are we getting
any sort of
actual confirmation?
Staking penalty?
People were saying
will be much
1040, but
smaller
where the
than
fuck
if
is
there's
it?
Too much concentration in.
No volume was better. I agree. This guy's just.
But Ethereum is responding to demand and institutional adoption, so we appreciate everything from like BlackRock leading the charge on that. Last question, and zooming out.
Fucking finally.
Our new
Last
paradigm
question.
of blockchain adoption. There's a lot of different players out there. There's a lot of competition out there. Ethereum was founded on the basis of decentralization and being a resilient network. I'll zoom out and ask as the final question.
Thank
Does
God.
decentralization matter anymore from an institutional standpoint? And what value do they put on
right here.
network?
Last question. Thank God.
Well, I think it does matter. I think some of the negativity around Ethereum in the narrative lately is very overdone.
I don't think
there's a lot.
I don't know how a
optimistic
human
about.
could be
Joe's
this
obviously characterized that very eloquently. When you look at our experience, take Biddle as an example. There was no question
bullish,
that
bullish,
the
bullish,
blockchain
bullish,
that we would start
bullish, 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 bullish,
with
bullish, bullish, bullish,
our
bullish.
tokenization on would be Ethereum, right? And that's not just a BlackRock thing. That's really anybody would enter this space. That's the natural default answer, right? That's really important. And you see even today, you know, we're excited about having this be a multi-chain
Mag
product
7,
now. We're seeing
up.
assets across all of them, but Ethereum has, you know, a significant majority of the assets still. And so clients clearly are making a choice that they do value the decentralization, they do value the credibility and the security. And that's a great advantage that Ethereum continues to have.
Yeah, so decentralization is the whole point. It's why our industry exists. There will always be well-resourced, patient actors that will corrupt, co-opt, censor
shut up.
systems if they're able to. There are famous incidences where the NSA in
Is
this
Trump
country,
gonna pump these crypto
has been
bags?
part of the cryptography ecosystem and adjust parameters to make it more easy to infiltrate or manipulate systems. The idea of sufficient decentralization is reasonable. So not every network
He's
has
boring
to be
the market higher.
rigorously
This guy's so
decentralized
boring
across
that they're
all
like, I don't know what to do. I
relevant
guess we just buy right
but
now.
Some of them do.
Truly has.
Bitcoin
He's like, I don't
does,
know.
Ethereum does, and
People are like,
we will continuously progress.
it's just so
decentralization
monotone.
So I think we're at time, but
Thank
this is
God.
a new era for
Go.
Ethereum.
Get
Very,
the
very
fuck
thrilled to
outta
have
here.
Robbie and Joe up here, and we're excited to see all the institutional adoption that's about to happen.
Please welcome Jack O'Halloran.
Why does it not say, please welcome Trump? Where is Trump conquering Canada or something? Does anyone know?
Hey everybody, how's it going? Pretty exciting day, huh? All right, that was an awesome panel. A lot of talk about adoption. That's what I'm talking about. So, quick show of hands, who took an Uber or Lyft here today?
Okay, shut the fuck up. I don't know what to tell you, but that's like probably the most boring shit, and it was about to get even more boring. So that's pretty much going to be it on the crypto side. Obviously, he was supposed to, I guess, being told that he was going to be at 1040. Maybe he's running a bit late. Maybe something's going on, but let's go back to the old equities market here. I'm still seeing this slow grind to the upside, very slow, very controlled. The one that's really standing out to me as impressive is Meta. Meta getting a nice 4%, but more importantly, recapturing 600. I'm also watching this right here of, I kind of like this trade idea at 1036. We got out of the transition zone, pushed back in, recovered, and you had well-defined risk. You had that opportunity to go long at 5701.02 with the risk at 95. So you're literally risking 5 to 6 points. And right now you have 1-to-1, but I'd be watching yesterday's high at 5715 and 5720. That's where I'm kind of watching. And those swing puts that I have, if we push and hold this, I have to cut them. Just risk management. You gotta wait. I'm trying to wait. I'm trying to be patient, but at a certain point you have to have your risk, and that's obviously my risk. So if we get smacked here, it'll be saving it by the skin of my teeth. But if we keep pushing, I gotta lay it down and be like, yo, this one did not break my way. But right now, price momentum pretty bullish. The 5-minute, 10-minute, 30-minute, 4-hour all bullish. The 5-minute, the 10 minutes, the 30-minute, the 4-hour all bullish. The only potential thing that could save my position now is if we do get knocked back into this zone, so below 5,700, specifically below 5,695, this recent low, and then we get sucked all the way back down to the bottom of it. Then, okay, we still have a fighting chance, but right now, specifically the Mag 7, look at that. It's just, look at this delta, non-stop. This is the second time it's taken a breather today. The delta is just ripping all day. NASDAQ, really choppy, actually getting hit right now. And then the SPY. So what's interesting on this even though we just hit a new price high, there is divergence. The delta did not hit a new high. You can see right here that the something is going on underneath in the SPY right here, because we have this lower high in delta, but we have a fresh high in price. So basically, we're just seeing less aggression. The 0 DTE call buying has basically stopped as 0 DTE put buying has sped up. So I wouldn't, as of now, according to the options market, I wouldn't necessarily be so confident in this holding. It's that story could be completely change if we see some of these puts close up, or if we see more calls being purchased. Like, obviously, that's all possible. But right now, we just see a massive lack. But it's also might just because we're getting closer to the midday, and then like, all right, we'll come back to the afternoon. But I would say be careful. We might be having a classic fake out. And if we get back into this, I just want to be very clear. This entire zone is a chop bullshit zone. This entire, $35.3.5, it truly is no man's land. We started off as bearish and we pumped into it, and then we grinded our way through it. We're trying to break out, but on this new fresh high, we are seeing divergence with the delta. The options market is not as aggressive as this price buying was, and we're also getting into not only potentially the choppy price period, but also the choppy just time of the day. Which is better, apex or take profit? Depends on you. There's not a definitive answer. It's just, it's you, you're trading, who's currently running a better deal. It's not just like a binary thing that at any point you could say this one's better, that one's better. Right now, Take Profit is offering a better deal to sign up. I think Apex and Take Profit are better than all the other ones based on the current deal. But those things ebb and flow. Those things ebb and flow. So we're at this awkward point of, are we going to be holding these levels? So what I'm going to do for myself even is just mark out these recent highs and these recent lows and understand if we're changing or not. So I'll set an alert up for the NASDAQ breakout. I'll set an alert up for the SPY breakout. Bitcoin taking a little bit of a hit. Maybe it's because everyone was anticipating Trump and apparently he hasn't done anything yet. But I don't know. I didn't even know he was supposed to speak at this. And then a lot of people in chat were saying he was supposed to speak at 10:40. And now we're just kind of waiting. What is the 0 DTE put? It's a put contract that expires today, March 20th. 0 DTE means 0 days to expiration. So now we're just kind of waiting. Just kind of waiting. I'm not seeing any. I'm trying to see if we have it. Tether buys more U.S. Treasuries than Canada. That's kind of crazy. Jim Simons, this is the best trader the world's ever known, in my humble opinion. Only if I getting scammed by her for not financial advisor. Jesus, that's not a thing you should be flexing. That's not a thing you should be flexing. All right, I'm not. I guess I'll check Trump. What is it? Blockworks? Yeah, scale. Trump in 10 minutes? Are they really going to... That was 6 minutes ago. Are they really going to suck me back into this? 5 minutes until Trump. Okay, fine. We'll go back. This is from the actual summit itself. Trump in 10, Trump in 5. Okay. I'll let them trick me.
Value, MEV, okay? This is where blockchains don't finalize their transactions.
I'll let them suck me back into this hell.
Well, a blockchain submits a transaction, and guess what? Anybody running a node can see that transaction until the transaction finalizes. And then you have front-running, sandwich attacks. Essentially, money and value is being taken from every user and every transaction through bots. Just last week, somebody did a 220K swap on Uniswap, and they ended up with $5,000 after. They swapped USDC to USDT. No, hey, they didn't use the Uniswap UI. If they had, they would have been protected.
Apparently Trump had to take a mean shit.
The problem is, this is something that we think needs to be fixed. This is the next frontier for scale also, is going and trying to fix this problem to make sure these things can't happen. We need to have safe waters if we're going to really
potential sign of a reversal is breaking this 1135 low, so watch that.
Fundamentals. The next growth stage is all going to be about giving tangible value to users, okay? real value. And there's some phenomenal use cases out there. Really excited about
bullish.
So just a little proof this works. And I have to say, this is
We're sitting
fun for me
right
now. We
on
started
top of
Scale
this.
over 7 years ago, all right? And the first couple years the network was live, we would count our users, our unique active wallets, users, and transactions in the thousands. We now have over 1 billion transactions. We have over 3.3 million wallets in the last 30 days. Over 91 million transactions. So the model's working.
Stuck sideways
and,
at 1024.
I'm not saying this to, talk just about skill, but to say when you really lean into building
coming
a
down
positive
slightly,
user
but
experience
overall
for
still bullish.
consumer-facing applications, you can get dramatic results. But these
clear
numbers,
divergence. Price went
frankly, are
higher,
just a
Delta
start.
didn't.
We're now in the top
Actually,
10
the
of all
zero
blockchains and
DT is
layer
getting
2s in
real
terms of
suspect.
transaction volume.
The zero DT
And
Delta
in
is almost
terms
at the low of the day.
Unique active wallets. And, but I think I look at this and our, set of competitors
guy needs to
and
hurry it up.
collaborators and
I can't take this. We're all just waiting for Trump to see what he does or doesn't say. Thus far, the administration, whenever they've been touting events like this, it's been buy the rumor, sell the news. None of the announcements have been leading up to what the public thought. Right now, you can see that the public is pretty fucking jazzed. They keep chatting about zero tax on crypto capital gains. I highly doubt it's going to be that. I highly doubt it's going to be that. But maybe. I mean, I guess at this point, what's the point in prediction when we just get wild announcements every single day? All right, we're seeing some weakness. This might end up being a shoulder, head, shoulder. So watch 5,700. Above it is bullish. And here's chop zone. Below 5,662.5. This is bearish. Bearish zone, chop zone, bullish zone. We're having a clear failure trying to go bullish, which is also now being represented in options, which you could see calls are being sold and puts are being purchased. This is a dangerous time to be bullish right now. You are fighting the most recent trend. I mean, puts have been purchased ever since 10:05. Be careful. Be careful. And we're right back at this. I have an alert for a potential reversal. If we do reverse, I'm not saying it means it's a reversal, but obviously to reverse, we would have to take out 568.86 and 582.58. So be careful. Okay. Is he done? Hallelujah. I'll clap for that. I will clap for that.
Please welcome to the stage Jason Yanowitz.
Fuck. That is not Trump. What the fuck, dude? I can't take much more of this.
How we doing, everyone? Good. I'm Jason Yanowitz. I'm one of the co-founders of Blockworks.
Okay, and now it's Trump.
In about 30 seconds, we have a historic moment. The President of the United States is going to address the Digital Asset Summit. This is the first time in history that a sitting president has addressed a crypto conference. I know everyone has their phones out, but please give a massive round of applause and help me welcome the President of the United States to address Digital Asset Summit.
Everyone at the Blockworks Digital Assets Summit. It's an honor to speak with you about how the United States is going to dominate crypto and the next generation of financial technologies. And it's not going to be easy, but we're way ahead. Just 2 weeks ago, we hosted the first ever White House Digital Asset Summit, bringing together many of the world's top leaders in crypto for a conversation led by our White House AI and crypto czar, David Sachs, who's a fantastic and very brilliant guy. That same week, I signed an order creating the brand new strategic Bitcoin reserve and a U.S. digital asset stockpile, which will allow the federal government to maximize the value of its holdings instead of foolishly selling them for a fraction of their long-term value, which is exactly what Biden did. He got a fraction of their value. We're ending the last administration's regulatory war on crypto and Bitcoin, and that includes stopping the lawless Operation Choke Point 2.0. Operation Choke Point went beyond regulation, and I mean far beyond. It was a form of lawfare through government weaponization. Frankly, it was a disgrace. But as of January 20th, 2025, all of that is over. I've also called on Congress to pass landmark legislation creating simple, common sense rules for stablecoins and market structure. With the right legal framework, institutions large and small will be liberated to invest innovate, and take part in one of the most exciting technological revolutions in modern history. It's so big, it's, I think, as big as you can get. Pioneers like you will be able to improve our banking and payment system and promote greater privacy, safety, security, and wealth for American consumers and businesses alike. You will unleash an explosion of economic growth, and with the dollar-backed stablecoins, you'll help expand the dominance of the U.S. dollar. And many, many years to come, it'll be at the top, and that's where we want to keep it. We only want to keep it at the top, always. I can already see that the energy and passion of the crypto community is the kind of spirit that built our country, and it is exciting to watch as you invent the future of finance. And right here, it's going to be right here in the USA, the good old USA. Together, we will make America the undisputed Bitcoin superpower and the crypto capital of the world. Thank you. Good luck. God bless America.
Nothing burger. Nothing burger. Nothing burger. Oh, it's going to be 0% tax. 0% cap gains. Nothing, nada, zilch, goose egg, just like last time. And you guys really thought he was going to announce 0% cap gains. Really? Classic buy the rumor, sell the news, Bitcoin getting cracked, MSTR getting hit, coin getting hit. We've been here before, folks. We've been here before. It is nothing new under the sun. People get all hyped up that there's going to be a big announcement, and then nothing gets said. Nothing, nada. And then look at that. Bitcoin down 1,000, coin down $2, and then MSTR. Trust me, he wouldn't be doing a pre-recorded announcement of something so big. Like, let's just think about that and who Trump is as an entertainer. You think he would really use a pre-recorded message? A pre-recorded message to say, yeah, no more taxes on crypto gains? You think the guy who's like the most well-known presidential entertainer of all time would say, yeah, something that big, that landmark of a statement, he would do on a pre-recorded message? Think about it. Think about it, folks. And now, yeah, these things are still getting hit. Well, it is what it is. It is what it is. The SPY still overall very strong on the day. I mean, the 5-minute chart, we basically had no break until 10:50. Same thing with the Qs, no break till 10:50. Giving a bit now. Clearly, you can see crypto is getting hit on the lackluster announcement, which was just, it wasn't an announcement. It was just a statement that they like crypto. We took out this low that we saw at 10:35. So the next low I would care about is 10-15. We are knocked back into no man's land. So if you're trading the overall market, I want to be clear. This is no man's land between 5,700 and 5,660, 65, somewhere in here. This is no man's land chop zone. If we get above it, great. Maybe take a bullish stab at it. If we get pushed below it, great. Maybe take a bearish stab at it. This is no man's land. We're back in no man's land. And I wouldn't be surprised whatsoever if we stay in here today, because it is the day before quadruple witching. So I'll have these alerts up to know if we're above or below. But if we remain in between, there's really nothing to be done. There's really nothing to be done. So just wanted to quickly share that with you. And also before I ditch, I just wanted to show you, here's the options flow. Mag 7, very, very strong up until 10:48. Now giving it back. NASDAQ, messy all day. And then the S&P 500, pretty much strong up until 10:26. We saw clear divergence where options went lower, but price went higher. And now the calls are kind of flat, but the puts are getting more aggressive. So I just wanted to show that. And if you want to track this throughout the day, that's exactly what SpotGam is for. You can get 80% off right now, pinned to the top of chat in the description of the video. Most importantly, thank you. I appreciate all the good vibes. I appreciate all of the good banter, all the good shit talking. You guys make my job awesome. So I hope I can make even your trading day 1% better. That's what I have for you guys. Like I said, I appreciate the vibes. We will be putting a update video out tonight around 7 p.m. Eastern, and then we'll be streaming once again tomorrow. Not only will it be a classic Payday Friday, but it's also going to be quad witching. So we're going to be giving away some prop accounts. We're going to be giving away some cold hard cash, and we're going to be enjoying the insanity that is quadruple witching. So get prepared for that. That's what I have for you guys now. I hope you crush it the rest of the day. Be careful. We are in that chop zone, and maybe we have an opportunity, but don't be so surprised if today in totality is pretty much just a nothing burger. It looks like that's how we're kind of currently going, but who knows? Maybe after lunch, maybe something's going to happen and people might want to position for quad witching, but right now it's a whole bunch of nada. That's what I have for you. I'll catch you guys later. Love you all. Peace.